Hello, hello, hello. Alrighty. What's going on? I think you guys can hear me. I always just have to check just to make sure. Okay. Alright. Well, what's going on? We're going to be performing my weekly outlook. I'm going to be performing my weekly outlook. I have a bunch of shit to do this weekend, so I'm getting it done early. Now, you guys have been liking the more concise sort of theme, so I'm going to be following that. Still breaking down things as much as possible and why. But let's get into analyzing the price action and the economic data. So this right here, it's a screenshot right off of Forex Factory. Everyone can go get it. This is showcasing what we can expect as far as economic data releases go, speeches, etc. Now, for the week of July 6th to July 10th, which is our trading week, you can see we don't really have much. On Monday, we have ISM Services PMI. On Tuesday, no news. Wednesday, meeting minutes. Thursday, unemployment claims. And Friday, no news. Now, this week, the first week of the month is always, like, in my opinion, I don't like it just because of the less likely chance that there's volatility. Now, this does not mean that these days can be valid and amazing trading days. In fact, it always happens to be that the days I expect the lesser probabilities, it always ends up being the days that deliver. But that by no means is a justification to be trading on days that you shouldn't. So let's kind of go over my plan. Now, Monday will be a trading day for me, but it's imperative that you wait after 10 a.m. I will be waiting after 10 a.m. I don't care if my setup presents itself within the first 30 minutes, which is our opening range after the opening bell. I don't care. I'm going to be waiting after 10 a.m. This is because it's a Monday. Typically, Mondays don't have that much probability, or it doesn't have high probability in terms of like delivery and volatility. And the fact that we happen to have red folder news, mind you, it's going to be the day after a bank holiday because today, Friday, July 3rd, is a bank holiday. So everyone's going to try to get into the market within the opening range. They're going to be trying to short up and down, buy and sell, whatever. And I want to be in no part of that. I want to be no part of that. But Monday does have the potential to be a decent trading day. I just have to be waiting for after the opening range to conclude. Tuesday, I'll be honest, I have no idea. It's a no news day, and I don't typically like trading no news days, and it's also going to be the no news day before pretty much another no news day. However, the fact that Wednesday is going to probably have a shitty morning session leads me to believe that Tuesday will probably be better than Wednesday. So Tuesday will be a full-fledged trading day. Now, Wednesday is going to be a day where I probably drop back in terms of risk, or I just paper trade because we have 2 p.m. FOMC meeting minutes, high-impact news. We have nothing in the morning session, so it's essentially a no news day for AM session traders. It's just less likely to really deliver like we would want it to. And if that's the case, I want to steer clear of those types of days. I'm not a fan of them. That's going to be the days where people are blowing their accounts, putting themselves in deep drawdown. So Wednesday will most likely be a no trade day for me. Thursday, unemployment claims should be a decent trading day. I mean, it's not listed as a high impact news event, but that's fine. And Fridays always depend on how the week's been trading up until that point. So Friday's up in the air. But yeah, I can tell you straight off the bat that Monday, Tuesday, and Thursday will be full-fledged trading days. Those are going to be days where I am actively putting risk on. I'm looking for a setup. Wednesday, I either have to be super selective and dial back risk, or I'm going to be dropping back to paper, and Friday's just up in the air. So now that we got that out of the way, let's go ahead and do our weekly outlook / weekly recap. So don't mind this candle. This is usually what happens whenever we have a bank holiday. This is just accounting for next week's trading. Don't ask me why they do that. I have no idea. But right here, this is our previous week's candle. You can see us trading higher. We end up booking the volume imbalance lower octant. If I zoom in real close, you can see we just turtle souped that perfectly. And then we end up delivering lower. So that's pretty cool. That's pretty nice. Something to key up on. And then we ended up violently closing near the open of this weekly candle. We had a pretty interesting week. There was a lot of, I guess, like fake outs and I do think that this week has sort of solidified my expectations as far as where price should gravitate towards for the next couple of weeks. Once again, I've been saying that, and it always just ends up running against that logic. So there is, of course, opportunity or chance that I am wrong. But then again, it's just what I'm expecting. I'm not hard-pressed to see it occur in the marketplace. If things change, if things don't go my way, I can always pivot and, expect something else. But at this point in time, what am I expecting? Number one, this premium wick, I do not want to see us trade past the consequent encroachment on a closing basis. We can wick through it. In fact, I'd say the furthest permissible price level that we can trade beyond the consequent encroachment on a daily chart is the upper quadrant. That for me would be like the furthest permissible level. At that point, if we just make another body closing past it, I just expect this high and the all-time highs to be taken. That's like common logic. However, if on a daily basis we close past the consequent encroachment, but then like the very next day we expand lower, which, mind you, the wick would still be printing on a weekly chart. If we close with the body beneath the consequent encroachment, then I would still favor lower prices. Now, of course, I'm not just expecting us to meander inside of these levels and just have an anemic close and not, have any movement. I honestly expect us to trade higher, book the consequent encroachment, maybe a little bit past that, and then expand lower. Because look where the consequent encroachment of this premium wick is overlapped with. This new week opening gap or weekly volume imbalance, however you want to label it. So at this point in time, there's really not much that's delivering us higher. There's nothing, right? I would argue that we're transposed to go lower. I think we're predisposed to go lower. I would expect all of these levels to provide resistance on a weekly basis to send us to this wick's levels and this imbalance, this inefficiency. Now, this discount wick, the same logic applies here. If we trade into this discount wick and we close beneath the consequent encroachment, I would expect not just the low to be overtaken, but this entire inefficiency to be overtaken. Why? Because that signals weakness. If we are strong and we do not want to deliver lower, we'll simply trade down to this wick's levels, we'll find support, and then we'll trade higher once more. Now, if we hop to a daily chart with those same levels transposed, okay, I'll just go ahead and weekly volume imbalance. We'll put it at the inside. So, taking a look at this looks extremely bearish to me, and I have a few reasons for that. Give me 1 second. So I have a few reasons for this. Number one, let's recap what happened. Price traded lower into this order block. We expanded on Monday and on Tuesday, overlapping this sell-side imbalance, buy-side inefficiency, turning it what I thought was going to be as an inversion level to send to all-time highs. Clearly, the very next day, we expanded and we overlapped it once more, doing what? Not only turning it into a balanced price range, but reclaiming it as its original characteristic. Whenever this happens, you'd expect price to utilize the SIBI as its original characteristic. And that's exactly what we did here yesterday, Thursday. We traded up into it. We souped the upper octant, failing to reach the high of that SIBI, and then we left it. And this right here is like a key detail. This tells me that we are extremely weak. Now, here's the big thing. What, in my opinion, is pretty much shaping my expectations for the coming week is the fact that if you look at this daily chart, what can you tell? Well, yeah, we're in a consolidation. Anyone can tell you that. But what specifically does this look like to you? If you're retail and you're a pattern trader, what does this look like to you? This looks like a bull flag. Now, for my ICT guys, they already know this. But for anyone who isn't a true ICT guy, there's things called, I guess you would more so call it a retail trap. But smart money does this quite often, and you'll see it on lower time frames. Price will make what seems to be a bull flag or a bear flag, and smart money will just rake everyone across the coals. And that's because the general populace, if you're a retail trader, you're looking at this and you're saying, oh, this looks like a bull flag. This means that we go higher, right? Smart money doesn't think with that logic. Smart money sits here and says, okay, Retail wants to see this go long, so everyone's going to be slamming long, which gives smart money enough orders to send this thing lower. That's exactly what they're going to do. And at this point, I also feel like as far as pure price action analysis goes, forgetting the fact that this is a false bull flag, I think that there is nothing but inefficiencies and PDRAs telling us we're going lower, right? We have this SIBI, which we already reclaimed. I do not expect us to trade back up into it because why? We have this weekly volume imbalance, which I'd expect price to find resistance at. We have the consequent encroachment of that premium wick, previous week's premium wick, that I expect us to deliver us lower. This up close candle right here that rejected from all of this price range, what is that? Our bearish order block on the daily chart. So the opening price should provide us resistance. Mind you, it shares very similar levels with the weekly volume imbalance and the consequent encroachment of the weekly premium wick. So I'm so bearish. I'm so bearish. And not to mention, look at this. Now we've put in trend line sell side. Beautiful. Trend line sell side. And you may be saying to yourself, well, isn't there trend line buy side above? You have to understand what is the narrative, what is the context that we are gaining from all of this price action analysis, that we are going lower. So now this right here is sort of like a supporting factor for our analysis. Mind you, there's also clean relative equal lows, which we'll see on a 1 hour perspective. But yeah, that right there, I mean, that is pretty much like the lay of the land on the daily chart for me. I just feel like it's too clean lower. I feel like there's nothing telling us that we're long. Not to mention we also have this inversion fair value gap, which we are back inside of. So we have so much that's just pointing to lower prices, which is something that I do want to keep in mind. Now, if we hop onto a 15-minute chart, I'm just hopping on a 15-minute chart for the purpose of outlining clean levels. And what do we see? When I zoom out on this chart, what looks clean to you? Yeah, these highs look pretty clean, but mind you, what looks clean to you that supports our thesis on a daily? These lows down here, way too clean, okay? These lows down here, way too clean. We have a lot that's supporting our case or my case for going lower, and I'm riding with it. If we hop on the regular trading hours chart, what do we see? Yes, we still get those clean relative equal lows, but that's not what I'm keying up on. Look at all of this unfilled, inefficiently delivered price action. Look at it. Regular trading hours opening range gap after regular trading hours opening range gap. That is only either seen one side of delivery or none at all. That's going to act as a draw. Price is going to want to draw into those levels for the purpose of booking it and making those levels efficiently delivered price action levels. So if this is the case, I feel like everything is just pointing lower. That's what I'm expecting on a daily and a weekly basis. And that's really all I have for that as far as analysis goes. I'll post like a really quick like weekly outlook on Instagram and a few more videos on Instagram. But yeah, this past week wasn't the greatest week for me. It was the first time that I actually took 3 straight losing days in a row, I think in like 16 weeks. So hopefully going into this next week, we keep things rolling. As you guys know, I was able to pass that challenge account that I'm doing for the Road to Profitability Challenge. And the idea is that, going into next week, we're going to build the buffer. And then next week after that, maybe get the first payout on that account. And then with that, we'll just keep on rinsing payouts on that account. And then we'll eventually get to the point where we are able to scale up. So that would be pretty cool. But yeah, other than that, that's pretty much it. And yeah, with that being said, I will see you guys next week.